What's up traders, welcome to Failure to Displace. In this video we are going to look at the New York AM session today on a trade that I took on EURUSD, which was a bit of a twist on the ICT 2022 mentorship using an inversion fair value gap / BPR to trigger the entry. Let's jump into the analysis now and I'll explain the trade in more detail. We'll start our analysis on the 15-minute chart just to see whereabouts we are in the higher time frame price action. From this morning, I was expecting a much larger pullback. I took this 3R long position. We're on Friday today, and generally you would expect Friday to be pulling back into the weekly range. It hasn't really done that, so the analysis was wrong. Despite taking a winning trade, price has now continued lower. We can see that on the 15-minute chart, we're leaving bearish fair value gaps which are being respected. That pulls my attention to these relative equal lows, which is yesterday's low from the New York PM session. This is untapped liquidity, as shown by our session liquidity tracker. So given the fact that we're in bearish market structure through London, I'm expecting a minimum of New York to come and take out yesterday's low, and then we can potentially look for a reversal on the 2022 model. I'm going to drop down onto the lower time frames and just wait for price to take out this low. So price has come and taken out the low. We're now on the lookout for the 2022 model, which is going to be a change in market structure, so a bullish break of structure, leaving a fair value gap for a long position to take us back into the weekly range. So price is continuing lower, no breaks of structure going long yet. So the break of structure that we are going to be interested in is going to be this one. So this is our current swing high that needs to be broken through. We've got a candle lower to the left and a candle lower to the right. So this higher swing point is the swing high that we would want broken for a official break of structure. I'll show you in a minute how we got into this trade without needing that. Left a bearish fair value gap at this point. Another bearish fair value gap. Price is closed through the first bearish fair value gap. So this is a sign that potentially we could be getting a reversal on. This fair value gap has not been respected. I'm going to highlight this fair value gap because the 50% of this fair value gap is an important level. We've gone higher. So at this point, we now have a balanced price range, very small balanced price range. We can see we had a bearish fair value gap between this candle and this candle. There was no overlap, and now we've got a bullish fair value gap again between this candle and this candle. We've left a gap. So this is going to be a balanced price range. These are very sensitive areas. When price comes back to these, you can generally expect a strong reaction. So we've got one balanced price range at this point. We've got a volume imbalance in here as well. So volume imbalances along with fair value gaps are showing a potential change in price delivery. So we could be going from bearish structure to bullish structure now. 50% of that larger fair value gap has been respected. We've come down. We have not taken the low yet, so we've still got a low here. So this is now sell side liquidity. Again, we've closed through this balanced price range. We've left a fair value gap over it. So price is still not efficiently delivering over this area. We've got a bearish fair value gap now left over this one. Again, we close through it and we close higher. So now we have a larger balanced price range, which is now from this fair value gap on the bearish side to this bullish fair value gap. So we've left a larger BPR. And we have now closed above this fair value gap. And we've had an internal break of structure at this point, or a market structure shift if you want to give it a slightly different name. So although it's not a confirmed break of structure going above the high that created the low, so we are still within this dealing range, we are now showing signs that we're turning bullish. We've got balanced price ranges, we've got an internal break of structure. Also take note of the time. So this large price delivery here is happening at 8:44. If you've watched my previous videos, you'll know that the 15-minute cycles are important to me. Based on Stacey Burke's trading, we can expect volume to come in at the open of the 15-minute candles. This is 8:44, the last minute of the current 15-minute candle. We've got an injection of volume. So this is also a great signal for me that we are potentially going to be driving higher now. This is where I decided I was going to take the trade. We've got a larger balanced price range at this point. Hang on, I didn't want to delete that. What I want to do is I want to show you this balanced price range, which is here. So again, we've got inefficient price delivery. We've left the bearish fair value gap coming down. Price has come, it's tapped the 50%, rejected, closed through, left a bullish fair value gap over this area. So this is still inefficient price delivery. And we've potentially now going to flip this fair value gap into an inversion fair value gap. So again, watching the 50%, specifically, we've got this level here as well. This bullish run on there. So this was enough confirmation for me. Start of a new 15-minute candle, balanced price range, potentially an inverted fair value gap with an internal break of structure. That was enough for me. Again, given the fact that I was expecting higher prices because it's a Friday, so I was thinking things will pull back into the weekly range. I was happy to take a long position there. Off the open of this balanced price range, stop loss just below this low. And my ultimate target was to take out the session highs. So quite a safe target, but still giving me a potential of a solid 3R trade, taking out the session highs. Again, to clarify, although we've not had a confirmed break of structure here, we have had an internal break of structure, leaving displacement, coming higher, leaving a balanced price range, and potentially flipping this fair value gap into an inversion fair value gap. If I was expecting price to continue lower, I would have expected the 50% of that fair value gap to continue holding. But it's not. It's closed through with a giant displacement candle at the start of a new 15-minute candle. It's giving me loads of reasons that I want to go long. So I took the long position from there, and then we'll see that this plays out really nicely. So price comes back, tags me in. This is really nice price delivery. You can see it's hit this top of this candle, building the balanced price range absolutely perfectly. So to the tick, hits it, and then rockets away. So there's essentially zero drawdown on this trade. It's just perfect price delivery. Price pulls away nicely. Now we are getting some consolidation here. The reason we had consolidation, and the reason I wasn't too worried, was because we were underneath this low still. So this would be my failure to displace level. Price has pulled down, consolidating, we'll come back and testing the Asia low. Because price has not rejected aggressively away from that, it's kind of consolidating under there. I wasn't too worried. We eventually break back into the range with a lot of volume. Coming to take target. And that was the 3R trade. Now, this could have been held for longer because I am expecting a larger pullback. The areas that we could have taken note of, we'll be using the daily range. So we could pull a fib from the high and the low, high to the low of the range. Just messed up. High to the low of the range, looking for our premium and discount areas. So right now, anything below 50% is classed as a discount. And this, according to ICT's teachings, would be areas that we want to be buying. When we get into a premium, we want to be selling. So I have bought in a discount. When we get into a premium, this is when smart traders will be offloading their buy positions and potentially looking for reversals at that point. So you could hold this to the 50%, or the optimal trade entry would be a really good area to hold this if you wanted to hold it longer. This does coincide with all of these relative equal highs at this point here. So we've got lots of buy side liquidity at that point there, so that could be a sensible area to offload the position. This would give you a 5.4R if you were to hold it to that level. We do eventually take that for the 5.4R. We do get a pullback. What's really interesting again is that we're going to get this injection of volume coming in to the new 15-minute candle again. So if you look where this price comes up, it pulls back, consolidates for a little bit, and then as we're approaching 9:45, so an hour later than where we took our entry, 9:42, 9:43, 45, we pull back into these fair value gaps, and then we get another injection of volume at the open of this 15-minute candle, and then ultimately that drives us up to our 5.4 target. Fantastic trading, really nice clean price delivery, and I hope you can see how I came to the understanding that price was potentially reversing at this point, given the presence of balanced price ranges and then specifically this inversion fair value gap with this internal break of structure. I hope you found the video useful. If you did, please consider leaving us a thumbs up. If you have any questions, please drop them in the comments section down below. I'll be happy to try and help you out where possible. And if you're enjoying the content, why not go ahead and subscribe? It'd be fantastic to have you on board. I'm dropping analysis like this more or less every single day. Thanks for watching, and I'll see you again in the next video.